I'll basically start off, and he's got a really interesting format about how he'd like it to run, so bear with me because I'll be reading this a bit. So rather than introducing each panellist and their firm, why don't we start our dialogue today by having each panellist describe one of the most disruptive big data companies they have ever invested in, or wished they would have invested in, or are considering investing in, and why they think the company is so disruptive. Over. Who would like to speak first?
I'm happy to go first. I guess the one that I wish I'd invested in was a company called Palantir. I think we all know that company. It is, I think they just raised $200 million at a massive valuation. I think it was worth $8 billion. But what they do is they've actually gone in and unified multiple data sets across some of the most complex databases in the world, across the CIA, the FBI, you name the three-letter agency. They've gone into these databases and created what they would call almost a virtualization layer that lets analysts really understand, is Arif Jan Mohammed who he says he is, or is he the other Arif Jan Mohammed who's not a very, very good person? Over the last 4 years, what's that? I'm not going to comment, but they actually know the way, and so.
He's been discovered.
Yeah, exactly. I'm in the database. I know that for sure. Being a Canadian guy who comes across the border and gets stopped on the random searches pretty often. So I'll plug Palantir, and I'll also plug a company of mine, Netscope, which came out of stealth today. You guys can all check it out. But they're a big data company, really going after the mobile and SaaS compliance and security problem.
So I've got a question for you, Arif. He would like to, says that you're clearly an advocate of cloud and big data, and when we look at companies like Qbol, which started as Hive as a service, has since expanded its sites as big data as a service, a SaaS platform. My question to you is, how does one build a big business on Amazon? Engine Yard and many have tried and failed, and enterprises Fortune 1000 and Global 2000 are far from trusting public cloud infrastructure with their data, aren't they?
Yeah, that's a great question. So, you know, the thesis behind Qbol is essentially that Hadoop is here and it's here to stay. So the big data revolution is happening, but the world of Cloudera and Hortonworks and MapR, more investors in MapR, is entirely on-premise today. And that involves racking, stacking, putting together clusters of servers, managing those servers, configuring them, and then creating your entire big data stack. The promise of Qbol is that you don't have to worry about the underlying infrastructure, but you can just come to us, point your data that is already in the cloud to the Qbol big data platform, and you're up and running. Now the question is this sustainable on something like Amazon or Rackspace or something like that? I would say absolutely. And the reason is that we're creating a large amount of value on top of Amazon. Just the same way that other companies like Zynga, for example, built their company in the early days on top of Amazon. So if you innovate at the platform and the business logic layer, there are large companies to be built.
Fabulous, thank you. So who else would like to talk about?
I'll talk
Cindy?
about BrightEdge. BrightEdge is a company in our Illuminate Ventures portfolio. They are search engine optimization across now, I think it is 60 countries and 40 different search engines. They really were the first company to crack the code on how do you automate the SEO process. And if you think about it, is there anyone out there, anyone really almost, that doesn't care about organic search? So they have been able to not just aggregate the data and analyze the data, but actually from that use the big data across now 8,000 brands that use their product to actually make recommendations to companies on how to improve their search, not just on web, but in social and other environments as well. So really exciting company that, it took a great deal of trial and error. It took a lot of scraping data from across the entire web to be able to do this. So they are continuously aggregating data and continuously monitoring changes in 40 different search engines in 60 different countries in order to be able to do this. So very interesting company.
So Cindy, one of your portfolio companies actually automates the process of aggregating data from disparate systems into a secure hosted repository and enables companies to leverage this business data for sales performance management. an application close to his heart. This is Burke from InfoChimps. Can you expand on what end user application verticals and use cases you think can provide the most upside with big data and analytics innovation?
Well, I mean, that's a huge question. I think his reference is to one category, so maybe I'll start there
Sure.
rather than try to say, where can it be applied? Because it can be applied to everything from, as we all know, medical information systems and diagnostics and everything under the sun. Our focus as a firm is exclusively on enterprise applications, enterprise mobile, and cloud. It's that simple. And so in that category, the company he mentioned, Exactly Corporation, is in fact really leading the way in terms of how you leverage the data about your own sales organization, their win rates, the tools that you're using in order to optimize performance to inform sales management on how to continuously improve that. They have data that in the past really just wasn't available to compare and benchmark your sales organization versus others, to actually determine what types of incentives work for what types of sales, even geographically, by organization size, by a whole variety of different factors. If you think about it, if you've ever run a sales organization or been in sales, and I've done both, frequently you're trying to determine bonus structures and incentives and all other things in a vacuum. You don't really know what is going to most motivate employees, and you can't predict the outcomes. And with tools like Exactly, that's exactly. Sorry, it happens to me all the time. That's exactly what you're able to do.
Fabulous, thank you. So who's next?
I'm happy to go.
Great, go for it.
So I have the silly rule of not plugging my portfolio when I'm asked that exact question. Maybe it's the Canadian humility. I don't know. Perhaps.
Canadian, I
But
plug my
I'm the more humble Canadian. I'll take that award. So the example I wanted to bring up in terms of sort of a transformative big data company is Prismatic, and it's less about the company itself and more what it's an early indicator of. And so we're seeing machine learning hit an inflection point where the thing that was most interesting to me about Prismatic, and it was actually the first example to do this, is actually presenting me with things that I would not have selected myself, but it knew my brain better than I knew my own brain, because we all have inherent biases, and we all have established patterns in the way we deal with our lives, and they found a very intelligent, passive way to actually introduce me to new and interesting things that were actually better catered to me than what I was already doing. So their first use case is in the content recommendation space. So we tend to ingest content based on the content source. So I read The Economist every week, or I read CNN daily, or I read TechCrunch. And we tend to kind of look at things that way, and that's been the first example where, in an eerie way, it knows my brain better than I do, and it's saying, hey, here's an article. It's not saying, by the way, read the source. It's saying, here's an article about something that's kind of been on the edge of your brain, and there's been a leap in it. And so I think that's an early indicator of, there's been a lot of noise in machine learning, but they found a clean and simple use case to take complexity out of my life and to help me overcome my biases.
Fabulous. So the question is that he's read that your firm is focused on companies producing insights from data. What are your thoughts on providing an as-a-service model for big data? Clearly the shutdown of Novant's cloud storage puts pressure on any venture-backed cloud service business in general, even if they are enterprise-focused like Novant's was.
I'm not an investor in Novant, but in terms of big data as a service, there are many different components to that. We tend to focus mostly on big data disrupting verticals as opposed to something, in the infrastructure layer. And so for us, the thing we really try to look at is we've been looking at data science as a service for a very long time. There have been a lot of attempts at trying to sort of solve that problem through, outsourcing certain parts of it and taking certain pieces of it, and that's been great. But in terms of big data disrupting verticals and outsourcing that component of it, the passive outsourcing is the thing that I think is most interesting to me. So there are a lot of folks who've been going to market with big data visualization tools that require sort of power usage and new skill sets by the business user itself. The thing that's been most interesting to us is where you go into a vertical and you're actually able to keep the big data, keep the machine learning behind the scenes, and just present the insights to the end user, whether or not it's in the legal space. So you've got folks like Lex Machina, again, sort of in an automated way, presenting learnings as opposed to kind of trying to attack and change the behavior of the users in the space.
Very good, thank you. So, who's next?
Sure. So one company that we've invested in the big data space is a company called Cognitive Networks. And so the idea behind Cognitive Networks is, well, I'm sure most of you guys in this room have heard of Nielsen. They make these boxes that track what people watch on their TVs, and this has become sort of the figure of merit in terms of establishing how many folks have seen a show, have seen an advertisement, and that dictates advertisement rates, et cetera, et cetera. Now this is a very old school approach to what is a, frankly, very complicated problem. So what Cognitive Networks has done is they work with TV manufacturers to embed technology on the TV, which works with backend in the cloud, to basically help the TV makers, help the networks, help advertisers understand who's watching what shows, when, and as a result, A, you get a much better data set than what Nielsen or most of the other guys who use these sorts of traditional techniques can find. And B, it sort of opens up the door to making your TV truly smart. When a lot of people talk about smart TVs, frankly, it's a very strange way of describing it because the TV itself is still fairly dumb. In this case, you have a TV that actually understands what you're watching and can serve up, for instance, polls, interesting content, interesting offers. Or you can even think about things like, oh, I just finished watching, episode 6 of Breaking Bad. You missed these episodes. I can then point you to Netflix or some video on demand service so you can, continue with your fix. So that's one example of a company that is dealing with extremely fast, extremely big data, and is sort of taking that approach to disrupt a very traditional industry and hopefully become a platform for a lot of more interesting services.
Fabulous, thanks, Benjamin. So the question is, DCM has not been aggressively investing in big data. Do you think we should wait for a clearer indication of where the value is being created, or should we be placing bets now? Given what we know about the more advanced players like the Hadoop distro vendors, is that right?
Sure.
Excuse my ignorance. Consider et al., what are your key investment metrics?
Sure, it's an interesting set of questions.
Yeah.
So I mean, I know Jim and Burke very well. I think what they were doing was interesting, and I think part of his question sort of came from that.
Yeah.
I mean, look, at the end of the day, we see a lot of interesting companies. The investments that we would classify as big data investments have been more oriented around applications, applying big data technologies and big data collection to disrupt traditional industries or to build new value in that sense. On the infrastructure layer, I guess from our perspective, there's interesting companies like Databricks that Andreessen Horowitz recently funded that are very interesting on the infrastructure layer. But for us, just in general, for an infrastructure level type of investment, what we're looking for is something that has serious, data gravity, to sort of use the buzzword, which is just, what is a system that can really aggregate huge amounts of data? Because data tends to clump together, and as we've all seen with applications, you move the application to the data, you don't move the data to the application, especially as the amount of data, the volume, and the speed increases. So just, look, we're very interested in investing in the space. I wouldn't say there's a particular method, but on the infrastructure side, we're looking for solutions that gather data gravity. And we're always looking for interesting ways of taking the interesting infrastructure technology that's out there and applying it to disrupt very large and interesting markets.
Great, thank you. So Rachel.
Yeah, I guess I
Last,
That's
last.
So all my examples are actually not IT based, which is probably a little bit different than everybody else. The company I wish I had invested in is sort of topical at the moment. I would say Climate Corp is the company I wish I invested in, just acquired for $1.1 billion. So of course I wish I invested. But what they did was they provide insurance to farmers for catastrophic climate-driven events, and so that. There's a whole number of ways that data science and probability and statistics and actuarial models play into what they did. But essentially what they did is they created an insurance market in an area that didn't exist before. And one of the reasons that insurance did not exist as a product in that area was the data that allows you to price the risk is very complicated, very messy, and very confusing, and requires a high level expertise from a lot of different verticals. So they did incredibly well, and obviously they became very valuable because of it. So I wish I had invested in them. I won't plug my own investments, but something that DFJ has invested in I think is really interesting is a company called Planet Labs. They make microsatellites. And I can't go too much into it, the way their technology works, but the question I would ask and the product that they will deliver to the market is, what if you had a picture of the globe every day at high resolution? I can't really say the resolution. What could you do with that? And that is big data on a whole different level. And it's also data gravity, or I think of it actually as data inertia on a whole different level, because you also cannot beam down from satellites pictures of the entire globe every single day in a very, very high resolution. So we think about big data in a little bit of people. We have traditional BI and data analytics and visualization investments as well, but big data for us in the sort of hard sciences and disruptors space also is part of our investment thesis. So what can you enable with this layer of data at a base layer, at some kind of analysis level above it?
So I could count the number of people in line at the iPhone store
Yeah.
every single day.
How much are you gonna pay me?
So Rachel, you've done quite a bit of work on climate change. Expand on how you believe this plays a role in your big data thinking. Climate plus insurance plus big data, for example.
Right, well, I guess I already answered that question. Climate Corp being the prime example of like the first successful exit in a climate change driven private company, or climate change driven thesis for investing. What I would say, the major thing I learned from spending 4 years as a climate scientist is that probability distribution functions are basically incomprehensible to the human brain. And I mean, which is the truth, we cannot we cannot ingest information that has a distribution function on the x-axis. We cannot price risk as investors, as entrepreneurs, as employees, as purchasers of products. And that's not a climate science answer, but that's something that informs my thinking about everything. Probability distribution functions are how the world works, especially as a chemist. If you study quantum mechanics, it's the same thing. Life is all about probabilities, but the human brain does not rationally think that way. And that dichotomy leads to all sorts of things. Behavioral economics is one of them, but also can affect how you serve a consumer-facing product, or how you drive enterprise decisions, or how you create a product like an insurance product.
Right, thank you. So my question to all of you, so maybe you can all give me a response, is how do you see this going? Like in 20 years, what's your vision? Because obviously that vision may not eventuate as far as big data goes, but you guys are investors, you have to be a bit ahead of the game from the rest of us to make those investments. So I'm wondering what your vision is of where things are going.
I think it's a lot less than 20 years out.
Okay.
And I think it is not unlike the way people thought about databases 20 years ago. 20 years ago, the database, my God, it was a separate category that you had people, the database companies themselves. If you followed one, Informix and some of the other guys, it was all about building a VAR channel and getting people to build their applications, and that's what they thought they had to do to build their business. I think the same thing is true for gamification, the same thing is true for big data, the same thing is true for many things that we're seeing today, where they just become mainstream and a part of any product anyone would build. You won't get ahead 5 years from now just by saying, I have big data, I do big data, any more than I think you do even already today by saying, I have gamification. It's expected. It becomes the norm. Or a database. Exactly.
Okay, that's good perspective, thank you.
Yeah, I think a glimpse into the future, and I have no idea what's happening in 20 years. I mean, if you'd asked me in 1990 if we'd have, the power of 1,000 Pentium processors in our pocket, people would have laughed me out of the room. So 20 years is way too far out for me to think. But a few years out, if you look at what Google Now is doing, and Google Now I think is an incredible product which essentially crawls all of the signals that Google has on you, and that is your email, your contacts, your calendar, your searches, and then surfaces delightful insights at the right point in time for you, right? So today it's actually pretty restricted, but what they can do is pretty amazing. So today if you're traveling, for example, and you've turned on Google Now, without even telling Google Now or an application that you've got a plane trip at 4 o'clock, it will actually surface a card that says, hey, Arif, you should probably leave now because traffic is a little a little backed up, and it looks like your flight is running a little late. That 4 years ago, completely unheard of, right? But that's a glimpse of where you can go in terms of all of these predictive analytics that are going through all of the signals associated with people, places, and users and devices, and the applications that you can build on top of that.
Interesting.
So I find myself, when I look at investments, gravitating towards startups solving big problems. Because at the end of the day, when you're a startup, sort of the world is sort of stacked against you in many ways. And the way for you to really get ahead of that is to solve a big problem that someone wants to do something for. Because when someone buys a product from a startup, they're taking a risk. And they're really only willing to take a risk if you're solving a massive pain point for them. And the interesting thing about big data, sort of to Cindy's point earlier, is that it will become kind of like what databases are today. Everyone uses it, everyone has it. And so the vantage point that I take is just, all right, if we assume that big data has proliferated, if that technology is in more places, what are either old problems that are being solved inefficiently that you can solve much better, or what are new problems that couldn't be solved in the past that can now suddenly be solved? You know, I talked a little bit about Cognitive, for instance. I'm just going to keep plugging my companies. You guys can say shameless. We invested in a company called Slice, which users opt in, and Slice will basically pour through your email to help you identify, when your packages will be delivered to you, when your packages will be shipped. And it'll also help notify you when there's a sudden price change, because a lot of e-commerce stores today will honor price shifts and they'll pay you the difference. And so this is a fabulous utility for users, but what people are finding also is that this has become an interesting way to do things like for instance, if Slice knows that you've bought a phone in the past 2 years, well, you're now on a new upgrade cycle. They could potentially notify you, hey, there's some interesting phones that are related to the phone that you bought before. There are companies out there who actually have found that the information in your email about things that you buy is a fantastic way of determining pricing, what's going on in the commercial landscape. There are a lot of new problems that can be solved that are extremely valuable, that just frankly, because big data has not been as prolific as it is now, that there are new problems you can solve, and that's really what excites me.
Right.
A couple things. One thing I would say is that as new data streams come online and get matched up together with each other, and as more information about an individual person or a set of people or a demographic of people becomes available, your ability to predict the future increases. Your ability to predict into the future increases. So you won't just be able to predict that n equals 1, like n equals 0 plus 1, which is you're going to the airport, but you're also going to be able to know from historical information and your machine learning algorithms over time what's going to happen at the other end. When you land in Boston, what's happening with the traffic, what's happening in the car services, what's going on in the news. So I think ability to predict in the future, although it won't be many days in advance, will advance. That seems kind of near term to me. The other thing that will certainly be true in 20 years is that what we consider big data will be different. And what's a big data problem in some of the areas that I invest in, which are not considered traditional big data areas, is that the data can't get into a place or format that you can do anything with it. So genetic sequencing data, or images of the earth, or all these other sources that we think of as data, but we don't think of them as big data in the traditional IT investing startup Silicon Valley sense. And the pipes between those two will have been created, for sure. And who knows if it's going to be TCP/IP or anything else, but the format to get that data to be worked on and for analysis and prediction to come from it will have been built someday.
Fabulous. And Siobhan?
Am I allowed to get a little meta on the world?
Yeah, go for it.
So one of the things just I've been toying around with in my head, and I'd be curious to get everyone else's perspective on it, is whether or not the reality of big data ends up being something that has a democratizing factor or a polarizing factor. And so to kind of explain what I mean by that, let's just take a look at the credit underwriting market, so credit distributed to individuals. So, the way it's worked in the US has been it hasn't changed very much in the last 40 years. Banks are very much deploying loans in the same way they always have been. And then you have, one of my favorite companies, again, not my portfolio, so I can plug it with all of my heart, is Zest Finance, which was one of the first examples of actually pulling in massive amounts of data from different sources and actually enriching and adding to the types of decisions you can make to score potential loan deployment. And so The problem that they were solving was the fact that depending on what statistic you look at, between 60 and 80% of the US is underbanked in some way, and a solid 20% is completely unbanked. And so what they did was create an entirely new market. And so that's a fantastic democratizing factor. And then you have other folks like Lending Club and various others out there who are able to do peer-to-peer lending, in part by matching, but in part by the data that supports that matching, right? And so that's a fantastic thing. On the other side, though, there's always been a bit of ambiguity with respect to deploying loans. And so you couldn't get a very granular real-time view of the state of an individual. And as a result, you deployed, very much the same type of loan to a larger group of people. So now if, for example, somebody loses their job or there's some slight signal in a model, the more you have on them, the more that can lead to a downward cycle. So someone who's kind of at the fringe then ends up sort of going down into lower income brackets because they lose their support networks.
Yeah.
And obviously the banks will then optimize to the folks that on a real-time basis are clearly going to repay their loans. So that ends up having a polarizing factor. And so again, you can apply this cross industry. I've just been curious as to whether or not again you have this equality that comes as a result of big data or the polarization. So
I think there's a democratization that's taking place right now today because of the cloud. Okay, so it's not just cloud-based architectures, it's also the fundamental of the pay-as-you-go subscription-based pricing mechanisms, right? So as a result, and as a result of the lower cost of ownership of these products, what you're finding, virtually every one of our portfolio companies and every other one that I look at is able to offer products and services to small and mid-market kinds of companies that historically could only be afforded by very large corporations, right? So that in and of itself is interesting, as is the ability for entrepreneurs with a whole lot less capital to start businesses because of AWS and all of the other services that are out there. That's another democratizing factor. One of the companies that I ran into recently that I think is fascinating, that is doing this right now in a very different way because it's really tied to the big data, is a company called Judicata. What they're doing is gathering all of the case law, all sorts of other really interesting data that's relevant to any kind of a court case. They're focusing initially on California labor law, but they will go beyond that to virtually any type of law in any state or nationwide jurisdiction. And from that data, they're not just able to tell you what the relevant case law is, they can tell you by judge, by attorney that you may be facing in a court trial and anything else, what the most relevant arguments are that they've used historically or which arguments have influenced a judge or all, just fascinating stuff.
Yeah.
That all of a sudden, it's not just the largest law firms in the world because they have, I don't know how many legal clerks and paralegals and associates working for them. It's small firms that could have access to that data as well, which for individuals who can't afford to go to the largest law firms suddenly creates a whole nother democratizing kind of aspect. Right?
Yeah, that sounds
It's an interesting company.
Yeah. There's something none of you have mentioned, and the reason it's on my mind is that we covered C2SV on Saturday, and John McAfee talked about his adventures in Belize, but he also talked about his new adventures or venture that he's invested in, which is a secure networking system that's encrypted but is not touchable by the NSA. So my question to you guys is, obviously what we're doing is we're sacrificing a lot of our privacy and security because of the big data. And I'm wondering, how do you see this issue coming in, impacting or going away? I don't know, you might all have different opinions about that, affecting the big data area. Because obviously you've had to do your due diligence on this because of the investments, right? Yeah.
I think it's a good question. I mean, I think it's definitely a question that the industry needs to do a better job of handling. So, very recently, I think Fitbit had a kind of an interesting scandal where they all their profiles by default were public because they just assumed, I'll just make that the default option. And people were logging everything. I mean, there's step stuff, but they were also logging their sexual activity. And at some point when this came out, Fitbit was like, oh crap, we should do something about this. And so I think it really will change our norms, especially as you look at all the new sources of data that are suddenly accessible, whether it's through the cloud or because Moore's Law now allows things that, like the Fitbit to be able to collect and transmit lots of this data. I think it's an urgent issue, and I don't know what will happen, but I do hope that the industry does a better job of managing this than frankly the consumer internet industry did. Because the last thing that you want, as an investor, as a company, as anyone in this ecosystem, is for the government to impose some random set of regulations that are motivated because of public outrage rather than something that's reasonable.
I think in some ways it's self-regulating. So,
Okay.
if you looked about 2 or 3 years ago, the common argument was thoughts on data privacy were segmented by age demographic.
Yeah.
Right, and so the older generation was, very concerned and very private, and the younger generation was very open. The thought was there was basically a tipping point. Once there's enough data about you out there, online, in public, you stop caring and you just kind of let it go. And well, no, and
You think that's generally?
that was the argument
Oh,
of the
okay.
prevailing wisdom
Thank you.
as of 2 to 3 years ago. And the interesting thing you're seeing is that younger generation have a complete whiplash effect. And so now you're seeing a lot of folks between the ages of 14 and 22 having completely locked down Facebook profiles or coming off
Oh.
Facebook entirely.
Oh.
And that's why you're seeing things like Snapchat come to be, which is ephemeral information that's not storable, those sorts of things. So
Okay.
you're seeing products and default settings, to your point, kind of go in line with changes in consumer preferences. And so I don't necessarily think that the older generation has opened up to a significant degree as this has unfolded, but you're seeing sort of the population as a whole go to the more conservative side as there have been a few burns with respect to privacy.
Okay.
And I don't know if you guys have seen this, which is one last thing is, who's been offended by an algorithm before? It's a weird question, but I definitely
Yeah.
have, which is,
What was the question again?
who's been offended by an algorithm? By a display ad, by anything.
Right.
You click on that one thing once, you clicked on the one Justin Bieber article, and then you've got these things following you around saying, hey, buy his next album, he's coming into town, one-on-one interviews, whatever it might be. And it gets to the point of uncanny valley, where it's like, I know that this algorithm knows way too much about me.
Creepy.
Yes, and then you kind of get to that.
Mm.
I think it just went into effect yesterday, recent legislation that requires companies to erase, void, whatever you want to call it, data about minors if requested by the minor. That is certainly a reaction to this whole issue. I would say it's very different in the enterprise or B2B world. I think it is much more self-regulating there because for the most part, these organizations have the opportunity to opt out. Now, what they opt out of when they say, no, don't include my unattributed data in your data schema, is that, or your data analytics, is that they don't have access to that data either. And so they make a fundamental choice. Am I willing to contribute my unattributed data so that I can compare myself, benchmark myself to all sorts of other things or not? But it's a choice.
Any thoughts?
I tend to view the world through the lens of the enterprise world. That's where I spend all my time. And it's probably a broader question than just big data, but really these holes that our friend Snowden really exposed in terms of what happens when the data is out in the cloud and what that means from a liability perspective, a compliance perspective, an auditability perspective. And so if you imagine that your corporate employees are storing corporate documents up on Dropbox and they are not encrypted, and Dropbox is hacked, what are the implications thereof? Right?
Even if they are encrypted.
They are.
I mean, even if they are, it doesn't matter.
That's right, exactly. They're decrypting all of your encrypted docs because they own the keys and they need to actually reformat it for different devices, right? So that has very, very serious implications for data leakage, for privacy, for corporate information, for IP. This is something from a trust perspective that we as an industry really need to figure out here in the US for cloud and big data to make it into the mainstream Fortune 500 and for CIOs and CISOs to adopt. If you look at Germany, Germany has adopted some of the most strict data privacy laws probably in the world. And the reason for this is they're pretty paranoid about data, and they've insisted that data does not leave Germany, that is encrypted, that the keys are actually pretty well regulated, et cetera, et cetera. We're going to see over the next 3 to 5 years this debate take place. I'm not sure how it'll play out, but this is something that absolutely from a trust perspective has to be solved.
Yeah, I agree. I think in the, only because these guys come from the consumer and enterprise space, well, I'm going to keep going back to the different spaces, but I do think, especially something like genetics, there's a huge incentive for everybody to opt into their data, be, going into a generalized arbitrary database or warehouse that people can run analysis on. And I think, I don't like to predict the future, but one of the things that I think may happen is that with either more stringent regulation or self-regulation of the companies themselves that own this data, there will be a separation of the analysis that can be done and the identifying information about the person. So having your entire genome gives me no information to predict what you're going to do next or how to serve you an ad, but having your entire genome and knowing your demographics and knowing your search history, that becomes terrifying. So but having your entire genome and having 60,000 other people's genomes and having specific information about the type of Alzheimer's spectrum, autism spectrum, behaviors that you display, then that becomes very rich information. So I think there's different levels of things that people will opt into, and I think there's a separation between the data itself and the information that becomes scary. Snapchat, I think, is actually a good example in a parallel space. Snapchat, by the way, I'm absolutely sure stores everything, but it can never, I don't know anything about the company, I'm just sure that is true. For them to deliver a great product, they need to know everything about what gets sent and why and the content and where, but they don't need to take any action to the consumer about that. They just are going to iterate on the product using it. It's like we're going to discover drugs by understanding the data, but we're not going to serve you a drug ad based on your genome. So I think there's a little, or hopefully not, I think there's a little bit of a separation between the two.
So I'd like to open it up. If people have got questions, there's some fabulous, interesting answers here, I'm sure.
You guys touched on a couple of interesting points. One being, like you named Palantir and Climate Corp as like some of the examples of companies that you wish you invested in. But I'm wondering, why did you decide against investing them? Like, is that a hindsight bias, or like, were there some specific reasons why, let's say, 5 years ago, you decided that Climate Corp is not really where you want to place your risk now? That goes, I guess, together with the observation that, as humans, we don't reason in probability distribution functions.
It's always very easy to see the successful companies in the past.
Right. Well, that's what I'm wondering. Right? We're not seeing the 1,000 that weren't mentioned today, right? That didn't make it.
Didn't make it. I can't answer. I'll leave you to answer for Palantir because I never saw Palantir. The reason we chose to not actively invest in Climate Corp is we did not believe that that company or a small company, not specific to those guys, could sell that product to the distributed workforce that is agriculture and a farm industrial complex. And that distribution channel is owned by 4 to 6 companies, depending on how you count it. And we did not think that a startup could compete. They ended up competing in small ways in local areas, and they got enough growth in those areas that a big distribution channel owner called Monsanto plucked them out of the water and is going to pump them down their whole channel. So arguably they didn't overpay for the product, but like all startups, it's the advantage that Monsanto brings to Climate Corp's product that will make the two very valuable together. So anyway, that's
yeah. From Palantir, in terms of Palantir, again, it's 20/20 hindsight, but what makes a good deal is its team, its product, its market, its go-to-market strategy, its price, its timing. When we looked at Palantir, the world was falling apart. It was March of 2009. I think S&P had briefly touched 800. Right? I mean, people were running around saying the world is falling, the sky is falling. Coupled with a very, very high valuation, now in retrospect, rightly justified, but a very, very high valuation relative to what was happening in the public markets, and as well as an extremely aggressive business plan selling into some of the most difficult customers in the world. This is a company that is a 1 in a million company, maybe 1 in 10 million company that said, we're going to go after government and we're going to get $10 to $50 million contracts out of these governments. How do I show these guys the door? Right? I mean, from a go-to-market perspective, sales cycles are years. The consulting revenues and the field teams that you need to build up to support these organizations are massive. And the sort of the bureaucracy and red tape that you need to cut through to get into these organizations, it's astounding. And against all odds, this incredible team of people at Palantir built what everyone will be talking about as probably, one of the most foundational enterprise software companies over the next 10 years.
Any other questions?
I'd like to hear your panelists comment a little bit about the state of the enterprise market. We've talked about a lot of end-use big data cases, but I think the race between the Cloudera's and the Hortonworks and the MapArms and the Couches, I'd be curious to see where you feel that marketplace is. Are we in the third inning? And kind of how you handicap that market playing out going forward.
So I think, at least for a couple of us, that enterprise is really our exclusive focus. So it's a very interesting question and one that we think about frequently. My answer is pretty simple. There are certain sectors that are a lot further along than others, and you've mentioned Cloudera. There's the boxes and the drop boxes and others. That there are certain established players in certain categories, but there are some amazingly untapped areas still as well. If you look at what is going on still in enterprise mobile, if you look at what's going on today in terms of vertical applications in certain vertical areas, whether it be unsexy areas like oil and gas and mining and construction and lots of other areas, the application suites that are in many of these verticals are still old school, old enterprise. I laugh because we were writing a blog about all of this about 6 months ago, and that we were putting on Inc.com, and the editor came back and said, well, Cindy, you can't call it B2B anymore, it's now enterprise. And I just laughed. I said, oh my God, we've gone backwards. We were enterprise, then we were B2B because that was cooler because it was closer to B2C, right? And now we're back to enterprise again. So, and enterprise is sexy and all sorts of other things that it wasn't, 3 years ago when we started investing in that area. But I think there's still a ton of opportunity there. And yet we are cautious about some of the crowded areas and areas where too many people are jumping in at once and inflating values or putting way too much money in a company too early. Those are things that scare us.
I think the one thing we're thinking about and waiting on sort of more proof points on is the enterprise sales cycle versus the B2D market. So B2D has been the kind of sexy buzzword. You're not selling the enterprise anymore. You're selling to the developers at the enterprise. No CTO, CIO, CISO. I've always been saying CISO, but now I've got a new one. And going straight to the developer and creating tools that have more of a consumer wrap on them that can be adopted from the bottom up. There's been a lot of hype around that, but there's also been a lot of friction and uptake there, mostly because there's a lag in, you can say developers are cheap, but it's not that developers are cheap, it's just that they don't have budget assigned to them for that purpose, and there's still, the risk of wanting to control all of the employees and approve all the technologies as opposed to kind of letting people do their own thing. So I think how B2D plays out in the next 1 to 2 years is going to be hugely informative of kind of where we are.
This is the gift that keeps on giving, in my opinion. If you look back, in the late 90s, there was Teradata that came out and sort of said, hey, we'll charge $1 million a terabyte. And they created a pretty interesting franchise. Then Netezza said, we can do it for $500,000 a terabyte. They created a lot of value. And then you had the Greenplum, Zastras, Vertica. There's a couple others that sort of popped up around 2004, 2005 that said, wow, $500,000 a terabyte, that's insane. We can do it for $50,000 a terabyte. They were all bought for about $300 to $400 million. And now you've got the latest wars where, hey, it's free, but you pay for software and some commodity hardware. It's a rising tide lifts all boats. I think we've used the word democratization, but now there are far more enterprises, far more users, far more developers that can take advantage of business intelligence infrastructure, big data infrastructure, to create some of the most interesting applications on top of this. And what is going to drive this rising tide is the imagination of developers that basically say, wow, I can store and analyze and process all this data for free. Let me see what I can do, and let me put some business logic on top of that. It is that's going to drive all the value at the infrastructure layer and create some pretty amazing companies that don't even exist yet.
Yep.
I'm just curious about, just going to one vertical I really haven't heard much mention about this week is healthcare. I was wondering what you see happening in that area, where the challenges are, where the opportunities are.
So healthcare is fascinating in that despite motivating huge, massive IT budgets and spends, it's still fairly low-hanging fruit across the board in terms of the use of IT. So we're still in a situation where, depending on the statistic that you subscribe to, right, potentially 50, 60, 70% of physicians still aren't on like modern EMRs that fulfill the government's standards for meaningful use, right? And so anytime you have something like that, I mean, that is one vertical that's very near and dear to my heart because I'm married to a physician. It's a space that I'm very interested in just because there's so much low-hanging fruit and I think everyone can pretty much agree, there's so much inefficiency in that system that, you know, bringing some data to bear, you know, there's a painful sales cycle, there's a lot of interesting regulations that make doing business there difficult, but the untapped potential there is massive. So I mean, I think it's interesting, and I would even argue there's so many changes coming down the pipeline. It's frankly, it's a little bit hard to really know what's going to happen, but I do believe huge change is coming.
I agree with that, huge change is coming. I also think the consumer health and hardware movement is like sort of inspiring people because they feel like it's close to them, and also obviously genomics and genetics movement will change. You know, in a very, very short period of time, you're going to be sequenced every time you go to the doctor, so there's going to be a huge data component to the way that you get served healthcare. But I just want to cast a little bit of a backlight on the fact that this is data revolution in healthcare is not new. It's not because of the Affordable Care Act. Like all of a sudden we all have to be online. You know, electronic medical record companies have been successful and come out of the valley for years. And even an old DFJ, it's not even a plug anymore because they're public, but an old DFJ company called Hippocrates, which served drug interaction and drug information to doctors on smartphones. And when we invested in 2003, it was like crazy because no one had a smartphone. And we essentially lucked out. My partner Andreas lucked out because the Palm Pilot came out after that. I mean, it was like just that doctors got Palm Pilots, you know? This is how venture investing is, right? So we lucked out, and suddenly all these doctors didn't have to go back to their books and look up every drug interaction and dosing information for every type of patient, but they could just pull out their phone, still treat the patient at the point of care. So there's both all sorts of ways to sell into this platform and all sorts of modes of data interacting with patient and care. It's really exciting.
Are there any other, I'm from the hardware world and the software world here, are there any other insights into what's going on in hardware, how big data is going to change hardware? We have the one example of the intellectual property dropping the smart television. So I'm interested in either your insights on how big data is going to change hardware, how big data might enable new, for example, in the genomics example, are we seeing genomics companies with public clouds to gather data? I'm really interested in the bits and bytes of the hardware, but please do extend how big data is going to change the hardware equation. One of the other ones are we can see big data enabling entrepreneurs to come up with specialized cloud services that will compete, that will displace the Googles, the Amazons, the Facebooks.
That's a good question. There's a very, very close relationship between hardware and big data. And we don't actually invest in that much consumer hardware, so you should answer part of it. But from my vantage point, hardware does a bunch of things, but one of them is hardware is the sensor of the world, right? So all data gets ingested somehow, some way through hardware, even if it's your keyboard or your touch interface or whatever. And the number and types of devices sensing information, and not traditionally sensing like photons in the room or something like that, but gathering information, that is proliferating dramatically, and therefore the data streams from it will proliferate, and the interactions between the sets of data will proliferate.
And how it's displayed as well.
Oh, yeah.
So the coolest application of 3D TV the other day that would not have been possible and wouldn't have even been interesting without big data.
Yeah.
The ability for you literally to be watching 3 things at once on a single screen, not screen and screen, but literally with it coming, part of it being up close to you, part of it being, you know, right on the screen, and part of it in between, and being able to select between those things what you wanted to rotate to the front. I was blown away.
I mean, I think what you're finding is, you know, whether it's enterprise hardware, whether it's consumer hardware, you're beginning to see a lot of those changes. So the cognitive networks example I gave you, for instance, that technology allows TV makers to meaningfully change the relationship that they have with the customer, with their content partners, with advertisers, because it enables new business models, it enables new touch points that didn't exist before. You know, in the enterprise world, I think there's a lot of folks who sell enterprise hardware now that are connected to some cloud platform, or they phone home. And this allows you to change the relationship because, when a piece of hardware has a problem, you can phone home and you now can send someone out there to build a deeper relationship with the customer, help fix it, help service them. You can tell them what upgrades to make and when. I think there's a lot of changes that are coming down just because of this technology enables new business models.
Yeah, from a pure hardware perspective, I'd say the two most disruptive technologies or enabling technologies are Wi-Fi and the fact that Wi-Fi cost per, chip has dropped probably 95% over the last decade, which means that you can now embed a Wi-Fi chip in anything, whether it's a light bulb, whether it's a sprinkler system, whether it's a thermostat, whatever it is, things are getting online, and that's an interesting phenomenon. The second thing is Bluetooth LE, which has just been turned on in a number of new phones, which essentially means that without dramatically draining the battery, your phone can talk to sensors anywhere. And so now you're being tracked whether you like it or not. And that creates a really interesting new set of applications and privacy issues that will pop up over the next few years. But if you think about these two sensors that are low cost, low energy, and ubiquitous, that just enables a whole new set of developers to go build amazing things.
I focus more on the sort of industrial Internet of Things space as opposed to the consumer. And sort of one of the interesting things we're seeing there is, you have the large hardware manufacturers of the world, so say the Boeings or, automobile manufacturers, who've been pure hardware players for a very long time. And now with the merging of hardware and software, the answer differs kind of vertical by vertical, but does the traditionally hardware provider become a software provider, or do they partner with software providers in the ecosystem? And you're seeing basically a land grab, dominant players trying to create the ubiquitous software platform with respect to automobile technology or within the airspace as well. And it's not clear the way it's going to go. So you've seen GE investing a ton of capital and kind of building the software ecosystem around industrial Internet of Things, and you're seeing a lot of players make a big push there. We don't know whether or not it's going to be sort of the incumbent hardware providers that will be successful or not, but they're showing early signs of partnership. And so my best guess would be that you do have the dominant pure play software folks and ending up partnering. And the more interesting thing that we're seeing is, so the same analogy for how you used to version software and update, you would do it every, couple of years when you got a new CD or disc to put in the computer. And then you saw the shift to the SaaS model where you could update almost instantaneously. So the versioning you could push the cycles became shorter and shorter and shorter and shorter. And I think that's the most interesting thing with respect to what's happening in industrial Internet of Things is you don't necessarily have to replace the console in an airplane cockpit now every 5 years. The automotive cycle is still 5 years. Now that things are being connected, the cycles can end up being intraday if they have to be in certain cases. So the speed of innovation just becomes that much more rapid, and therefore the pace of innovation.
So I'll tell you one trade-off on it because it's a personal story, and you just reminded me of it, a painful one. So the battery in my 7-year-old BMW dies. I think, no big deal, I need to buy a $300 or whatever it might be battery. I cannot get the car started, so it's towed to the BMW dealership. They call me up the next morning and say, well, actually, we have to upgrade your software in order to replace your battery. We don't make that old battery anymore. And by the way, the battery is the price you thought it would be, but the software upgrade is another $350. And it takes all night to install, so you can't have your car until the next day.
Oh,
That's the trade-off.
it's a bit painful.
So you'll benefit by the public cloud that BMW is building to let you know.
My next car is a Tesla.
So I think we've got time for one more question, if anyone's burning to ask a question. No? Yep.
Another point you touched on, Benjamin, you mentioned that you like to see companies going after some kind of concrete, crucial pain points, right? Addressing those. But I'm wondering how big of a problem is too big? Where do you draw a boundary? Because one example is, let's say, biotech and cancer research using genetic sequencing, predictive models to try, tailor therapies, right? But that's like capital intensive process. And also there's a ton of uncertainty there, right? So I guess like when you guys evaluate opportunities, right, where do you draw the boundary between, okay, this is big problem, but I'm not entirely sure that, they'll get to the solution versus, all right, seems like just the right scope.
I mean, it's a very complicated question. I think what we try to do is actually kind of similar to what Rachel described earlier. I mean, we do try to chart out like kind of a risk function. I mean, maybe not explicitly analytically or anything like that, but we do try to understand kind of the risks, especially over time on staging versus what the payout is at the end if you do solve the problem, right? If you told me you could cure all cancer, that's a pretty big claim. There are probably heavy risks involved, but if you could do it in a simple way, you're not going to have any trouble finding money, right? And so I think different investors have different profiles in terms of time frame, in terms of the size of outcome they're aiming for, the amount of capital that they're willing to contribute at what stage. It's a multi-variable problem that if you're solving a bigger problem, most investors are probably willing to put more capital and more time behind it, but it's a trade-off between all those factors. I don't know if that answers your question. I don't have a simple do X and do Y.
That makes sense, right? No, I'm not looking for a simple answer. I don't think that has a simple answer.
I've actually seen a difference coast by coast. So I was based in New York for 5 years, moved out here 6 months ago. And in New York, there are a lot of verticals, there are a lot of customers. There's less of sort of an ingrained technology innovation culture, which is, admittedly been popping up. And so what you tend to see the bias of investors in New York and the companies in New York doing is creating something that's leaner, going to market earlier, talking to customers earlier, and releasing sort of lighter products. I don't necessarily mean that in a bad way, but a lot of the investors in New York are looking for early traction, early product market fit, bite-sized things that you can sort of really own and then grow beyond. Whereas, on the West Coast, the concern is that's not really a defensible technology. Yeah, you stumbled into something, but why don't you take the extra time and the extra capital to build something where you really can sort of put up barriers and defensibility around your product. So that's just kind of the bias I've seen coast to coast. There is no concise answer for what a venture investor should do on one side or the other.
I will say, depending on who you are, I mean, DFJ has a history of investing in the craziest, biggest stuff, but we're investors, for example, in all of Elon's companies. So the range of things that people want to do, but literally his goal is to make life interplanetary, to make all transportation on Earth electric, to make all power in the residential and commercial area electric. We're invested in Craig Venter to make synthetic life possible. I mean, so it can be enormous depending on who you are, and you'll find the right person to work with you.
Thank you so much, all of you. It's fabulous.